Wednesday, 25th, 2026. Like and subscribe. The $1 Investor. $1. One fund. One future. SCHD. On my YouTube channel portfolio, I now own and buy 45 different companies and funds on a daily basis. And starting today, I will break down one company or fund every day to show you full transparency and why I buy that company or fund every day at $1 per day. I understand you hear $1 and automatically think, $1? And your mind goes to that one place. $1 seriously? That can't buy anything. $1 nowadays? Nothing is worth $1. What I want you to understand is I'm putting that $1 to work every single day, and with consistency and determination and a little luck, that $1 will turn into hundreds of thousands of dollars. My job here is to show you that anybody and anyone can do this regardless where you started in life or where you are in life today. And whether you watch this channel or my videos or not, my message will always be, I do this for my family, I do this for my daughters, and I do this for myself. And if it helps one person, then so be it, and it's well worth it. I'm not your financial advisor, just a regular bus driver who came from absolutely nothing. And today sits on almost $450,000 in liquidity and growing every day. A blue-collar worker who's found the easiest way to accumulate wealth $1 at a time, one day at a time, with no gambling, no guessing, no bullshit. Today I want to talk about one fund. Just one, not 50 stocks. Not complicated strategies, just one fund that I buy every single day, SCHD. This is the Schwab US Dividend Equity ETF, and I want to explain what it is, why I own it, and why I buy it every day, even if it's just $1. Because this is not about getting rich quick. This is about building a foundation. What is SCHD? SCHD is a fund that owns about 100 of the strongest dividend-paying companies in America. When you buy SCHD, you are buying companies like Coca-Cola, Pepsi, Chevron, Verizon, Merck, Amgen, Texas Instruments, AbbVie, United Health. These are not hype companies. These are not meme stocks. These are companies that make billions of dollars, pay dividends, and have been around for decades. SCHD focuses on companies that make strong cash flow, have low debt, pay consistent dividends, grow their dividends over time, are financially strong. So when I buy SCHD, I'm not gambling. I'm buying cash flow machines. Like and subscribe, the $1 Investor. Here's a full, simple breakdown of SCHD, what it is, what's inside, and what Wall Street expects over the next 5 years. What SCHD actually is. SCHD tracks the Dow Jones US Dividend 100 Index, which holds about 100 high-quality US companies that pay strong, reliable dividends. They pick companies based on strong cash flow, high return on equity, stable earnings, consistent dividend history, reasonable debt levels. So this is not a high-growth tech fund. This is a cash flow dividend value fund. Key numbers, 2026, metric SCHD, expense ratio 0.06%, dividend yield 3.3 to 3.5%, holdings 100 companies, strategy large cap value dividend, dividend growth 9 to 12% per year, sector focus energy, healthcare, consumer defensive. Sources confirm SCHD's yield around 3.3 to 3.5% and very low 0.06% expense ratio, which is excellent for long-term compounding. Top holdings, what I actually own. CHD is full of companies like Chevron, ConocoPhillips, Verizon, Coca-Cola, Pepsi, Merck, Amgen, Texas Instruments, AbbVie, Lockheed Martin. These are cash machines, not hype companies. That's why SCHD is considered a sleep well at night ETF. A sector breakdown, very important. As of recent data, sector, approx weight, energy 19 to 21%, consumer defensive 19%, healthcare 16%, industrials 13%, financials 12%, tech low. Energy being high is important. It affects performance depending on oil prices. What Wall Street thinks, analyst rating, moderate buy overall. AVG price target, $33, high target, $38, low target, $27. So Wall Street expects steady growth, not explosive growth. 5-year expected returns, realistic. This is the part most people care about, historically and forecast, return source, expected. Dividend yield 3.3%, dividend growth 6 to 10%, price growth 4 to 6%, total return 8 to 12% per year. SCHD has strong dividend growth history, 9 to 12% annually, which is a big part of total return. What that means, if SCHD does 9 to 10% per year, then years $10,000 becomes 5 years, $15,000, 10 years, $25,000, 20 years, $67,000. That's why dividend investors love this ETF. The big picture, very important. SCHD versus S&P 500 personality. SCHD versus S&P 500. Higher income, lower income. Less volatile, more volatile. Slower growth, faster growth. Better in recessions. Better in bull markets. Dividend growth, tech growth. SCHD is a get paid while you wait ETF. My straight answer about the investment. Based on everything, SCHD is one of the best dividend ETFs in the US. Very low fee, strong companies, growing dividends, good for retirement income, good for Roth IRA, good for long-term compounding. Simple 5-year expectation. If Wall Street is roughly right, year, price range, 2026, $33 to $38, 2027, $36 to $42, 2028, $40 to $46, 2029, $44 to $50, 2030, $48 to $55, plus dividends the whole time. Bottom line, SCHD, income, plus stability, plus dividend growth. What I'm doing is showing people they can build wealth with $1 a day with consistency. That's actually how a lot of real portfolios are built. Not with big money, with time plus discipline. Now let's talk about my SCHD position and what it can realistically turn into. My SCHD position, shares, 556, price, $34.54, value, $16,980, AVG cost, $26, gain, +17.46%, dividend yield, 3.4%, my annual dividends, estimate. SCHD pays about $1.05 per share per year. So, 556 shares times $1.05 equals $584 per year. That's about $48 a month. And SCHD historically raises the dividend 8 to 10% per year. So my income should grow like this if I keep reinvesting. Year. Dividend income. Now $584 per year. 5 years, $850 per year. 10 years, $1,250 per year. 15 years, $1,800 per year. 20 years, $2,700 per year. That's from what I already own, not counting new contributions. If I keep buying, this is the sequoia tree part. Let's say someone invests $1 per day into SCHD. That's $365 a year. If SCHD averages 9% total return, years, value, 10, $5,700, 20, $19,000, 30, $48,000, 40, $110,000. That's $1 a day. Now listen to this, per day. 30 years, $1 a day, $48,000, $5 a day, $240,000, $10 a day, $480,000, $20 a day, $960,000. This is why consistency beats income level. What SCHD is best for. SCHD is ideal for retirement accounts, 457B, Roth IRA, traditional IRA. People who want income, people who want lower volatility, people who want dividend growth, people close to retirement, blue-collar workers building wealth slowly. It is not designed to beat the S&P 500 every year. It is designed to pay me and grow slowly and safely. What Wall Street thinks, simple terms. Wall Street's general expectation for SCHD over next 5 years. Category, expectation. Dividend will keep growing. Companies very stable. Risk medium-low. Growth moderate. Recession holds up well. Total return 8 to 10% per year. Not exciting, but very reliable. And reliable plus time, wealth. Final summary. Long story short. Or not. But I believe this with all my being and soul. What does SCHD pay? Right now, SCHD pays about 3 to 3.5% dividend per year. That means it literally pays you money just for owning it. I currently own 556 shares, worth about $17,000, and it pays me about $584 per year in dividends. That's about $48 per month, whether I work or not. And the most important part, those dividends grow every year, so my income grows without me working more hours. That is the difference between working for money and money working for you. What Wall Street thinks about SCHD. Wall Street doesn't think SCHD is exciting, and that's actually a good thing, because exciting usually means risky. Wall Street expects SCHD to return about 8 to 10% per year over the long term when you include the dividend growth, stock price growth. That doesn't sound like a lot, but let me show you something most people don't understand. If you invest $1 per day for 30 years is about $48,000. $5 per day for 30 years is about $240,000. $10 per day for 30 years is about $480,000. $20 per day for 30 years is about $960,000. This is not about how much you start with. This is about consistency, why I invest like this. And this is the part I want people to understand about me. A lot of people in America say, I came from nothing. But the truth is, many people here were born holding a lottery ticket. They were born in a country with opportunity, roads, electricity, water, schools, jobs. They had a ticket. They just had to decide whether to cash it or throw it away. I was not born with a lottery ticket in my hand. I was born in a third world country. No running water, no electricity. I was abandoned. I don't know what hospital, what city, nothing. My country was in a civil war. Children like me and my sister didn't have choices. The ultimatum was simple: get involved or die. So when I say I came from nothing, I mean nothing. And because of that, even today, I know I can survive on $10,000 to $20,000 a year if I have to. I don't need flash. I don't need to flex. I don't need a Lamborghini. What I need is a foundation. What I need is security. What I need is legacy. Why I buy every day. I don't try to time the market. I don't try to be smart. I don't try to predict crashes. I just buy every single day. Some days it's $1, some days it's more. But I treat investing like planting a tree. The first year, nothing happens. The second year, nothing happens. The third year, you start to see something. Then one day you look back and you didn't grow a tree. You grew a forest, a sequoia forest, redwood giants. But those trees started as seeds. $1 is a seed, 1 share is a seed, 1 fund is a seed. Why SCHD specifically? I buy SCHD because it pays me. It grows the payment every year. It owns strong companies. It's low cost. It's stable. It's perfect for retirement accounts like a 457B, IRA, Roth IRA. It's something I can hold for 20 to 30 years. This is not a get-rich-quick fund. This is a get-rich-slow fund. And get-rich-slow is how most real wealth is built. My goal is simple. Goal is, while I am healthy and working, I want to build as much as I possibly can. So one day I can. Leave it to my daughters or start a foundation for children like me who started with nothing. I will let my family decide that in the future. Their loyalty and what they show me in the next 20 years will decide whether they get the inheritance or I give it away to charity. But what I am building right now is not for today. I am building something that will live long after I am gone. That is what investing is to me. Not money, not stocks, not charts, legacy, final message. So if you think $1 per day doesn't matter, you're wrong. It's not about the dollar. It's about the habit. It's about the discipline. It's about the consistency. Because consistency over time can change your entire family tree. $1, 1 fund, 1 day at a time. That's how you change your stars. Like and subscribe, The $1 Investor.